So the daily time frame, guys, hands down, is the most consistent time frame to trade in the Forex market. In fact, if you want a very high win rate or to add more profits to your trading, then you most definitely want to make trading on the daily time frame something that you do on a regular basis. What makes a daily time frame so reliable is that each candle shows the entire daily move, but it's all in one candle. This takes all the guesswork out of trying to figure out what happened in the market for the previous day, and it also gives you a pretty good indication of where the market may be going on the next trading day. Now, when trading off the daily time frame, you basically only have to check your charts one time per day. That is at the close and the opening of the new trading day. You do this just to make adjustments to your positions and to look for new trading opportunities that may have set up on the current trading day. Now, if you take a simple trading strategy, such as one that says sell when price is trading below a 200 period moving average, and then buy when price is trading above a 200 period moving average. If you combine that with the daily time frame, you will be trading a profitable strategy. This simply shows the consistency of trading on the daily time frame. Now, I'm going to show you guys a few examples on the charts to show how easy it is to trade right off the daily charts. So what I'm going to do right now, I'm going to show you guys how powerful the daily chart can be. And I'm going to give you guys a real simple trading strategy that you can use where you can profit from trading the daily time frame. And this strategy right here, guys, is designed for those that, probably just want to look at the charts one time per day, hold their positions for, a few days to a few weeks, and be highly profitable in the Forex market. So what I have on the charts, I have a 200 period moving average right here. I have a simple support and resistance. These are round number support and resistance. You can plot your own support and resistance on the chart. It really doesn't matter. And then I have the Heiken Ashi candles. So you can easily see the reversals or the trend in the market. And here's a simple trading strategy. The only thing that you're looking to do with this strategy, guys, is trade when price is below the 200 period moving average. You want to be looking for sales based on the reversals in the market. And when price is trading above the 200 period moving average, you want to be looking for buys based on the reversals of the market. So here's the strategy. So you would simply just, let's go back right. So this strategy can be traded really easy. So basically what you have is price going up, right? So we don't want to take this buy right here, because remember, we're looking for sales because price is trading below the 200 period moving average. So once, using the Heiken Ashi candles, once you get this reversal candle right here, this momentum candle right here, you want to go ahead and go short. You want to go ahead and sell, right? You want to stick your stop loss behind the swing high of the previous consolidation period. So price consolidates when you get this sideways action right here, this sideways trading action right here. This is a consolidation. So what you can do, you can just simply mark off where price is consolidating, right? So you see price went up. These candles right here, they basically traded in the same area. That's called consolidation, right? So when price breaks out of this consolidation, is usually about right here. When price breaks out of the consolidation, you want to go ahead and put in a sell order right here, and you want to put your stop loss back here, and then you just want to ride the market on down for some pips. All right. Once price starts to reverse right here, you want to actually get out. I mean, you can actually throw an oscillator. You can actually throw like a stochastic or something in addition to that on the chart, so you can actually see where price is reversing. I always like to use 5, 3, and 2 as the slowing part of my oscillator. You can just leave everything else as it comes, close that out. So right here, so in conjunction with combining the price, this sideways action right here, boom, when price comes out of this right here, this momentum, And then you can use the oscillator when price crosses below the 80 level, or when price crosses above the 20 level, you know it's time to trade. So when price goes below, you want to go short about right here, and you want to ride this market on down. This is 80 pips stop loss. You want to ride it on down. You know, there go your 1-to-1, your 80 pips, and you want to take it as far as you can until your oscillator turns back over, starts to turn over right here. That indicates, you know, you want to go ahead and get out of this position. And you wait for the market to trade back up and give you the same setup right here. Gives you pretty much the same setup right here. You want to go short, stop loss goes back here, ride the market on down. Remember, it's all about trading. It's all about trading below the 200 period moving average. So you're looking for shorts. You're looking for shorts. Now, then the reversal, the opposite of that trading strategy comes into play when price crosses above the 200 period moving average. Then you want to go ahead and look for buys. You want to look for buys. So this is a real simple trading strategy that can be easily traded on the daily time frame. The reason why this strategy works so well on the daily time frame, because the daily time frame cuts out all of the noise being traded in the market. So if you take this candle right here, let me show you guys something. If you take this candle right here, I'm going to place my line on this candle, When you place your line on the candle, when you go back to on the 1 hour time frame, the line is going to be at the beginning of the day. Remember, this is a daily time frame, so each candle represents one day. So when I go down to the 1 hour, let me show you guys. When I drop down to the 1 hour time frame, wherever that line was placed on the daily is going to start me at the beginning of that day, right? So here is that actual day right here. This is that full candle right here. This wasn't the best example, but on the daily time frame, you just get one big red bar. But as you can see right here, we had a pullback on the 1 hour time frame. We had a pullback. Let me find a better example for you guys to try to show you guys what I want to kind of convey. Let me try to find an example. I know I could find it if I was using regular Japanese candlesticks, but I'm using the Heikanaishi candles. They usually only show the trend in the market. That's why I love trading with these candles. But here we go right here. So if we look at this candle right here on the daily time frame, this is going to be one small red candle, right? So let's go back to the daily. See, this is a small red candle, right? How did I know this was a small red candle? So look at this candle, guys. Price came out, went up, but it closed lower than it came out, than it opened. It closed lower than the open. That's why the candle is red. So let's take a look at it on the 1 hour time frame. Show you why the daily time frame is so good and nice to trade off, because you don't get all of that noise. You only see what actually the beginning and the end, right? So as you can see, price came out, it went up, and then it closed. Price closed for that day lower than it opened. That's why that candle is red. But you see all of this noise. This is much more difficult to trade than that small red candle, because you would have been going short, because the previous day's candle was a bearish candle as well. So just to show you guys how easy it is to trade using the daily time frame, hands down, if you trade off the daily charts, it's the most consistent time frame to be trading off of. The con to trading off the daily time frame is that you don't get setups. You don't get a lot of setups. You don't get readily setups every single day. A lot of traders like to be in the market every single day taking trades. But on a daily time frame, you don't get as many setups, daily, because you have to wait, because the moves take much longer, or the setups takes much longer to develop. So you don't get a lot of trades trading off the daily. That is one drawback from trading the daily. But if you're patient and you're willing to wait on the trade setups, you can be more profitable, simply meaning you have a higher win rate, as well as you'll be able to pull more pips out of the market. I pull hundreds of pips out of the market every week simply trading on the daily time frame. So guys, so all time frames are important. The daily, in my opinion, is probably the best time frame to trade off. Forex King. If you've learned something from this video, please like, share, subscribe to the YouTube channel. All right, guys, have a good day.